The Chinese demand actually is around 6%, and taking into account that they consume nearly 32 million tons of aluminium, 6% is a fairly robust growth of consumption in China. The Indian aluminium growth in the first quarter has been around 13%. So overall on the demand side, aluminium, the metal of the future, whether it's auto, whether it's different sectors, the demand side has been very strong. I guess the problems in the aluminium side have always been on the supply side. And on the supply side, the situation has not changed from the last quarter in the sense that the rest of the world is in deficit, whereas China is been in surplus. And that has not really changed. Now, you may remember that China had shut down quite a lot of capacity last year, nearly 4 million tons. Now, what everybody is watching is whether any of that capacity will actually restart. And that remains a little bit of the fear because the cost curves have gone down. More and more of the Chinese capacity is becoming profitable. So I guess what will really drive this LME now is really whether Chinese capacity will come back to the market or not. Our view is that LME has remained relatively stable in these last 6 months. It's been between 1550 and 1650. And we think that the LME is going to remain range bound. So that's really our view on the LME right now. Now, little bit on the industry cost curve. Now, what you will see is that worldwide there has been, oil prices have been low, so that you have had lower carbon prices. Alumina prices have also been low. Now, what has impacted the cost curve in India quite a lot, I think, has been what I would put as the very superior performance of Coal India. I think Coal India has done really a great job in the last few quarters now. So there is a huge availability of coal, and that has brought coal prices down. And really, producers in India have really benefited from low coal and hence low power prices. So that has fundamentally caused the Indian aluminium producers' cost curve to go down. So input prices, and especially coal, I think has been very critical for us. Now, from the government side, we have been making various representations, and in the last budget, the government increased the aluminium duty from 5 to 7.5%. But at the same time, they increased the coal cess from 200 to 400 rupees a ton. So really, that cess increase has negated the positive impact of the duty for us. Now, we continue to discuss with the government through the Aluminium Association, and there are various initiatives like safeguard, anti-dumping that are in discussions are ongoing on that. So if I now go to the next slide, and if I look at the copper industry updates, I think here the supply from the mines for copper concentrate has remained robust. The LME of copper has been depressed. Again, this is largely driven by how much China is importing of copper or not. Like most metals, China is the largest consumer of copper. But unlike aluminium, China is a net importer of copper. So depending on their copper imports, the LME price of copper is affected. So copper prices have been subdued. They have been very volatile. But I think what's important for a custom smelter like us is what we call TCRC, which is the conversion and refining charges. And that, if you notice, have been relatively stable. So for us, TCRC has been stable. Sulfuric acid prices, which is a byproduct in this first quarter, have been very good. DAP realizations, which is another from sulfuric acid, phosphoric acid, we make fertilizers, which is DAP. Those prices have been under pressure. I mean, the market is well supplied, and I suppose you read the news. And the coal cost was lower. So overall, on the macro side on copper, TCRCs are stable, and we expect them to remain stable for the rest of the year, which is probably the biggest driver for Hindalco. Now, if I go to the next slide, I'm going to talk a little bit about the operating performance. So let's start with the Q1 FY17 highlights. So aluminium EBITDA was up 64% year on year. And I think that the largest part here is because LME did not really play a big role. If you look at LME Q1 of last year versus this year, I mean, this year LME was down by nearly 11%. The premiums were down by 80%. But really what has helped us deliver these good results has been our lower cost of production, has been our focus on efficiency, has been the lower input cost because of lower oil prices and lower coal prices. So really, I think that has been the biggest driver for this good performance from the aluminium side. What I would like to share with you is that the government recently held coal linkage auctions, and Hindalco has secured nearly 4.5 million tons of coal. And I think that this is very important because now a large part of our coal needs going forward, at least for the next 5 years, are locked in with the right price as well. I mean, we got it at a price which is, we have paid a reasonable premium on the notified price, so which is slightly lower than the e-auction prices that are there in the market today. So this has been, I think, a very positive news for us. This has not had any impact on Q1. You will see the impact of the linkage coal only from Q3 because deliveries will start. The other important part for us from a cost and efficiency point of view has been that all greenfield projects are now stabilized. So Aditya, Mahan, the two smelters, Utkal, the refinery, all are running at full capacity, which allows you to get good efficiencies, which of course brings the cost of production down. Novelis, I think, had a great quarter. You have seen the results. EBITDA was at 268 million, up 26%. More important, the auto shipments were up 15% year on year. What is driving really driving Novelis's performance is auto shipments. And the shift that we are trying to do to get more auto as a percentage of the total. Can remains the biggest, but as the auto percentage goes up, you will see the performance of Novelis improving. And on the copper side, this quarter was a bit weak because we had a planned shutdown. We had a planned shutdown, volumes were lower by 35 KT, but the good news is that this shutdown went very smoothly. The startup has been very good, and hence I'm expecting now Q2, Q3, Q4, copper to be performing very well. So broad results, Praveen is going to give you the details, but net sales was down 11%. That's the top line. The top line was down because LME of both aluminium and copper was down. Now, the interesting thing is that the aluminium top line still grew 7.5% in spite of the LME going down because of higher volumes. So we had a lot more volumes in this quarter versus Q1 of last year. But as you can see, the EBITDA, 1,351 crores, was 34% higher, largely on the very strong aluminium performance. And net profits of 294 crores was 381% up. So I think by any measure, the performance this quarter for Hindalco has been very good. Now, if I just go in and look at aluminium performance in a little bit of detail, alumina, we grew the volume by nearly 10%. The metal volume grew to 308 KT, which is a 17% increase over the Q1 of last year. But I think more important, if you look on the right-hand side, which is our value-added products, wire rods grew by nearly 80%, FRP grew by nearly 13%, FRP is rolled products, extrusions grew. So besides the primary metal growth, the value-added products as well grew quite strongly, and that adds to the bottom line of Hindalco. So if I now go to the next slide, and I just show you Utkal. Utkal is a 1.5 million ton alumina refinery, which is very crucial to the whole aluminium business because the alumina prices, the alumina volumes go straight to our smelters. So it's running at full capacity, and I'm happy to remind you, I think, which you have been told in previous presentations, that it is probably one of the lowest cost refineries that we have in the world. So it is very crucial for the results of the aluminium business in India. What makes Utkal quite unique as well is that the cost of production is low because it has this large conveyor belt that brings the bauxite from the mines, which is called the long distance conveyor. And what is interesting is during these monsoons, and you know, in Utkal, in the mountains there, the monsoons are really strong. The conveyor belt performed very well. So, you know, normally we used to bring the bauxite by road. With the LDC fully commissioned now, our Utkal refinery this monsoon has been running at steady full capacity because of the performance of this long distance conveyor. If I now go to the next slide, this is very important to understand the results of Hindalco this quarter. because the results were not driven by the top line. They were driven by our cost of production and our operational efficiency that we delivered. So one important reason, as I said, is the scale up. I mean, all our smelters and refineries are running at full capacity. So obviously, we are getting the full benefit of that ramp up. The new 8 smelters are, of course, giving you a much better cost efficiency. But I think what has made the real difference this quarter is also the efficiencies delivered by our older smelters of Renukut and Hirakud. So these ones also, we have been working quite a lot on various measures to bring their cost down per ton. And I think that if you look at the blended cost of aluminium per ton, Hindalco now is in the first quartile. Aditya and Mahan were always in the first quartile, but Hirakud and Renukut also have come down in cost, so that the average cost per ton of Hindalco now is in the first quartile of the cost curve. So this is a very important. And last but not the least, coal availability and coal prices have really helped us in this quarter. Next slide. So quickly a review of the copper business. I think copper, as I said, we had a planned shutdown, so volumes were lower. As you can see, 65 KT versus 102, largely because of the shutdown. But you can see that the DAP production was higher because we have ramped up capacity of the DAP. So I think that the copper business now, with the startup having gone smoothly, you should see these volumes returning in Q2 and the performance of the copper business continuing, the good performance that they showed in Q4, continuing from Q2 onwards. Quickly telling you a little bit about Novelis. Novelis had a 26% growth in EBITDA to 268 million. Overall shipments were slightly down because of can being down in Canada and the US, but the good news was the auto sheet increased 15% year. This is really the business driver for Novelis, because as you know, we have got 5 new lines of auto sheet that we have put in. All of them are up and running. And our goal is to increase the percentage of auto shipments in the overall Novelis mix. Next slide. So I will now turn it over to Praveen, who will quickly take you through the financial performance, and then I'll summarize and we'll come back for a quick Q&A. Thank you.
Thanks, Satish. Good evening, ladies and gentlemen. I'll take you through the financial performance of the company very quickly in a few slides. As you can see here, the revenue for the quarter was lower than the last year, same quarter. As explained before, the reasons are that the realization for both aluminum and copper have been lower. Copper volumes have been lower because of the plant shutdown, but aluminum volumes have been significantly up over the last year. EBITDA was higher by 34% year over year at 1351 compared to 1005 crores last year. And this has been explained in detail, and I'll go through the segmental results separately. Both aluminum and copper have performed well. Copper had the shutdown impact, but aluminum has really surpassed many expectations. The depreciation and finance costs have primarily peaked out, so there is not much change. The profit before tax is almost 5 times of the last year's same quarter. Profit after tax is also almost 4 times of the last year. These results are based on Ind AS, the new accounting standards, which have become operational now from 1st of April. And therefore, last year's figures are also reclassified and rearranged in a way which reflects the Ind AS performance. The basic EPS, not annualized for the quarter, is high at 1.44 compared to just 30 paisa for the last year, same quarter. Coming to the segmental results, aluminum performance, as we said, is extremely good. While the volumes, the revenues, are up about 7.5% at 4,200 crores, the EBITDA has gone up more than 900 crores compared to last year's 550 crores. So there's a huge amount of jump, almost 65% jump over the previous year, same quarter. The reasons have been explained before. Our operational performance has been very good. Volumes have been high. Input costs have been lower. Although the LME and the realization has been negative for this business. Coming to copper performance, net sales is lower, both on account of the shutdown impact, the volumes are lower, as well as the realization is lower, LME being lower than the last year. The EBITDA is lower at about 284 crores compared to 398 crores of last year. This is primarily the volume impact, which, as we mentioned, after the shutdown is over, the plant has come back very, very strongly, and we hope to see better results in the next quarters. Coming to Novelis, they had a sales of $2.3 billion, lower than 2.6, because again the LME and the premiums have been lower in this quarter compared to last year. Their EBITDA performance, however, is very strong at $268 million compared to the $212 million last year. This, as we mentioned before, is very strongly because of the reason that auto shipments have gone up, the profitability has improved, the product mix is better, and this is again the second quarter of consistent performance from Novelis area. On the next slide, I will just explain to you the transaction that we had on Aditya Birla Minerals Limited. Aditya Birla Minerals Limited was a listed company in Australia, a subsidiary of Hindalco, where we held 51% shares. This was basically started about 10-12 years ago, and it had a couple of mines which were producing copper concentrate. The idea was a steady supply of good concentrate for our copper plant. The mines have almost run out of their life, and therefore we were contemplating for the last 1 or 2 years to divest this portfolio from our company. This we have completed successfully in July 2016, and this was through an open offer by another listed company in Australia, Metals X, which is primarily into gold and tin assets, and we participated in that offer. We've got about 8 Australian cents per Aditya Birla Minerals shares and 1 Metals X share against 4.5 Aditya Birla Minerals shares. The Metals X shares have also been disposed of in August, and therefore this divestment has been completed in Q2. The impact of this is not reflected in Q1 because this process has been completed only in Q2. So I'll invite Satish back to summarize the performance and going forward.
So I think to summarize, as I said, all greenfield projects are now running at capacity, which I think is very important. And hence, the strong operational performance that you saw in Q1 of this year was actually on back of that strong volume as well as the efficiency we gained when all plants are running at their full capacity. We were, of course, significantly supported by lower input costs. So coal prices were low, oil prices were low. So we had the lower input costs that helped us. And I think that, going forward, because I think the normal question people ask is it sustainable going forward? The fact that we got that 4.5 million tons of coal linkage, which will be delivered from October, means that the coal prices that we have seen probably are now going to be sustainable for the next 5 years going forward with that 4.5. So this is very important for our cost base that we got that coal linkage. I think the copper business post-maintenance is good, has ramped up very smoothly. So copper had a weaker Q1, but is going to see very strong comeback in Q2.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.